Hello and good morning, everyone. Welcome to Almus Market Mornings, your daily dose of financial updates. I'm your host, Swaraj, and I have with me Mr. Pankaj Rathi, who will be taking us through the latest in the financial markets. Now, on the domestic front, yesterday was a day of important data. Indian Q4 GDP came in at 4.1%, which was in line with market forecast, but below previous quarter growth. We also had the fiscal deficit numbers, which came in at 6.71% of GDP against estimates of 6.9% of GDP. Pankaj, what is your sense of these numbers and what other updates do you have for us?
Hey, thanks, Swaraj. Good morning. Basically, numbers have been lined, but below previous quarters, which saw 5.4% growth. Now, the important thing is we have to notice that there is a higher inflation, and which is having a significant effect on consumption through higher energy and food prices, which slowed to 1.8% compared to an upward revised 7.4% growth during the previous quarter. Manufacturing output contracted 0.2% year on year in the 3 months beginning ending in March, compared 3 months ending in March, compared to expansion of 0.3% in previous quarter. The full year FY22 growth is now pegged at 8.7% versus an earlier estimate of 8.9%. Going forward, with oil prices showing no hint of falling, weakening consumer demand and contraction in manufacturing activity, and increasing interest rate scenario will remain a concern on India's GDP. The other side, the good news on the Chinese economy opening up that pushed risk assets higher in the last few sessions reversed partly yesterday, with the European Union decision to ban most of the oil imports from Russia. European Union leaders agreed to ban more than two-thirds, almost I think 90% of Russian oil imports, tightening economic screw on the country, even as Moscow's force pressed their offensive on Ukraine eastern Donbas region. Leader of 27 nation bloc had to meet and negotiate with long-sought deal earlier on May 30th in Brussels, amid concerns raised by Hungary and other neighboring countries reliant only on Russian fuel. Now, all this impacted our crude oil prices, but the speculative positions which were there in the market that led to some profit booking. And what happened is Brent crude oil corrected by almost $3 from peak, now trading at below USD 116 per barrel. There are few challenges in the market, but another challenge to the market is renewed fears of inflation sustaining high in coming months. Evidence which was seen in European flash estimate were released. Inflation in eurozone came in at 8.1% for the month, up from April record 7.4% and above expectation 7.8%. This comes after inflation prints from several major European economies surprised to the upside in recent days. All this led to a German yields moving higher. Now, German 2-year yield had reached a fresh 11-year high, which is moved by 1.3% from November 2021. So in November 2021, we were minus 80 basis. Now today is 0.48 basis positive. So almost a significant move of 1.3%. In a very short span of time. If you look at this, is almost matching like US yields. US yields also moved by 150, 170 basis points during this period. Dollar's corrective move lower has sustained, though market has retained a very bullish bias. Euro's resilience and commodity currencies rally after China relaxing COVID-related restrictions have kept the dollar subdued. Interestingly, even S&P officials, which generally talk down their currency, maintain a dovish tone, hinted at a relook at the inflation print. They pointed to a strong franc helping contain inflation. This is another technique which is being adopted by many central banks, keeping their currency slightly overvalued, which helps them to contain the inflation. Look like containing inflation. Technically, dollar looks ripe for more correction in downside. We might target between the area of 100.20 to 100.50, which can take euro between 1.0850 to 1.09 and GBP and 1.29%. Indian 10-year G-Sec will continue to move higher and trade yesterday closed at 7.42% on higher crude oil prices. Today, mostly it would be dealing within the range of 7.38 to 7.43. We have seen a lackluster move in gold, which is between 1840 to 1860. In absence of any big triggers. USD INR is likely to deal in range of rupees 77.50 to 77.75. Today, as a new month begin, US balance sheet tightening will begin and some softness in crude oil. In that background, we see a range of 77.50 to 77.75. That's all. Thank you.
Okay, thank you, Pankaj, for that detailed updates on the developments. Now, of course, as Pankaj mentioned, full year FY22 growth for India is pegged at 8.7% against previous estimate of 8.9%. We are seeing eurozone inflation, which has come up above expectations. We are seeing higher crude oil prices, which is, of course, negative for India. So, a lot of updates coming your way, and in such dynamic markets, we need a good risk management policy to bring some certainty. That's it from our end. Have a good day, everyone. We'll see you all tomorrow.